All right. Well, welcome to the Bookmap Academy meeting, the coaching and mentoring. We do this every Thursday, as you guys know. We've got a bunch of stuff to go through. A lot of traders. We've got full coaching staff today. Thanks, guys. Coaching staff today. And then a lot of other stuff to go through here as well. Housekeeping. First off, the disclosure. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, and first off, we've been promoting this. It's on, go to bookmap.com and you'll see it right there on the home page. The crypto competition we're having with one of our partners, Tino from Traders Reality. You can sign up right here on the home page of Bookmap. It starts in 3 days. Some great prizes. Really, very good crypto trader and really entertaining and great guy. So should be a lot of fun. It goes for a few days next week. I think the 10th through the 13th is what we have. So that's one thing. You can sign up here and take a screenshot if you like as well with the QR code and win $1,000. Blue Jacket competition will start next week as well. Right? We start on the 10th of June all the way to the end of June. You can just register here, bookmap.com/bluejacket. And a special note here. You can win 3 months of Global Plus with stocks and or futures data. The special note is the same that we covered last time. If you cover trading in your content, trading from the Bookmap chart, showing where you entered, where you exit, how you manage the trade, you'll get twice the credit. Okay, twice the consideration for Blue Jacket. Also in Bookmap Academy, twice the credit. All right, so that's this part here. Please show the trading in your content because we can give you so much better feedback. That's really helpful to look at the second part of trading, not just the setup and your criteria to get into the trade, but how do you manage it. In fact, I think it's actually, well, you got to have an edge, but managing your trade is probably the most important thing because you have to manage the risk. How do you do that? Please show your trades and then get the extra credit for it for your Academy quota. All right. And then tomorrow we have a special event at 10 a.m. Bookmap Academy webinar with Robbed. Okay. I'm sorry I didn't have a slide here for him, but I will tomorrow morning. He already went through with me some of the things he's going to cover in replay mode, how he uses replay mode in Bookmap and how that helped him tremendously. Really start to understand like what's he looking at and how to debrief and improve. He has a process there. So it's really good. Come to the event tomorrow at 10 a.m. It's in the special events English room. Please come for that. That's it. So let's jump over here and we'll start off with David. Okay. And CMJ. Okay. So first off, let's open the mic up for CMJ. I believe he's in here. Hold on a minute.
Second.
No, he's not. I don't see him.
Denied, Bruce.
Ah.
I don't see him, but he's usually here.
He
might pop in later.
Yeah. All right. So we can start off with another one then, David.
Sure.
We'll start off with your. Is Vinny in here? Vinny V.
Vinny V is here. Yep.
Okay.
Perfect.
Second row.
Okay. Excellent. I'm gonna give you the mic, Vinny. open it up and accept. We've got also Laura. So, okay, looks like you're still muted, Vinny. You're got you in here though. It's probably in one of the circular buttons in the center, kind of lower portion.
Looks like a hand.
Yeah, you'll see a little mic icon there. Maybe that's it. Okay. Well, as we're waiting here, we'll jump in and let David take it away.
Yeah, sure. Thanks, Bruce.
And then we'll hopefully get you connected.
We'll run it. Yeah, no, well, usual introduction. Good afternoon, good evening, traders, colleagues. Thank you for joining us. Thank you all of you in advance for doing all the great work, posts and everything else in between you do. We really appreciate that. And we all enjoy looking through these and talking about them, not only today on the Webby, but also like yesterday, Bruce and myself were catched up and chatting on things. So thank you for that, doing all of that. On this chart, would be good to see my usual sort of thing, what sort of time frame we're in. Actually, I think this is possibly an ETH trade and so forth, looking at those times. It's Instagram, so like we always have the challenge our end of getting the quality of that, but it looks like a possible ETH trade, but it would be good to know. Nice to know, and it's a common theme across all our posts, including my own, in terms of the time of the day, and then also that sort of contextualizing. We'll see that when we see with Laura shortly, some great contextualizing of the day, what it actually is sort of going on. Maybe zoom out, do a zoomed out view of the instrument you're looking to trade. That can be very, very useful. And make some notes as well, whether there's news coming out, whether it's PMI, whether it's CPI, whether it's NFP like we'll have tomorrow and so forth, any Fed speakers. It's just nice to sort of understand what the day was about. So please try and sort of bear that in mind. In terms of the setup, yeah, it's great. I don't know exactly what was happening on the left-hand side of the chart, Bruce. So again, whether the price has sort of scooted down and then this is a 180 reversal, but we can see very clearly at sort of around about 5:15, just before 5:15, volume is really picking up on the bid there. The volume bar, I'm missing the scale. I am missing the scale. So again, if we can, next time we're doing screenshots, we can capture when you're doing these, Vinny, if you can capture actually the volume, so we can see. Now we all have our own sort of volume thoughts and so forth, like I've talked about in the previous weeks, what I'm looking for on whether it's NASDAQ or ES with an ETH versus RTH. But I like myself to have a particular volume that I'm willing to trade at. That's part of my own checklist, or not trade at. Either way, we can see a decent pickup in volume. And then, as you've rightly done with the arrows, you've got that sort of higher low pattern and so forth. You've then got that build-in liquidity, which is good support for any pullbacks. Your entry, great. You wouldn't have known at the time when you've gone into actually at that range area. Myself, being a bit more cheeky, I probably would have gone in a little bit earlier, simply because of the larger volume. But that's the sort of trading style that I do. You've held it well in that range, which is good. You're pointing out rightly iceberg support. Now, it's, as I said, I think it is ETH, Bruce. So those icebergs are not big. They're not big for ES, but I agree they're also worth noting. I do note them, as Jack will sort of verify when he sees my post in Spark Gamma. I do make a note of them, but I'll often say, yeah, okay, they're there. I'm keeping an eye on them, but they're not necessarily market movement. But either way, you've marked them as support. Tick for that. The liquidity support is building good. And then we see, as we get a little bit further on, where it says iceberg support, Bruce, you have another blip on the volume throttle. If we look a little bit lower down, the bid's up and off she goes. Then you're starting to see, as you've rightly pointed out, the liquidity target is starting to build up there, which is good. You're looking for an 8 point and so forth, maybe a little bit of front running. Absolutely nothing wrong with that at all. I do like the fib you've got in there. It's again a common theme that we'll use tonight and on other nights. As traders, we all like to lean into something, whether that's an anchored VWAP, whether it's a VWAP, whether it's a VPOC, whether it's EMAs or EMAs, low of the day, high of the day, overnights, or whatever they are. Those things are really good, if I bluntly say, a crutch for us to trade from and to. So do find what works for you, and you clearly are. So you're ticking down that checklist, and a very respectable trade, Bruce, has to be said. Let me throw the ball to you, Jack. What do you think, sir?
I really like the liquidity support there. I really like having a level, and then that level just kind of building more and more and more support there. Because like if price does rebound there and I'm looking at a stop below that, I'm going to have a lot of visual before my stop is even challenged. So maybe my trade plan might change a little bit, or maybe I'll be a little bit more dynamic. So really notating that liquidity support there, I think is incredibly important. And then as a market pulse aficionado, I'm a huge proponent of utilizing it. I only use the subchart essentially for market pulse nowadays. I keep stops and icebergs up there, but I toggle on and off market pulse from hearing it audibly to seeing it visually for screenshots and things like that. So I really love being able to see those kinds of long signals and see how people are adjusting to kind of more of these, like, there's a lot of pressure in the market right now. Once that gas eases up off of there, is the market going to lift? Yes, it is. Here you go. And then you get a nice little runner out of it. So overall, really great setups.
That's a good segue, if I can pinch that there, Bruce. A couple of the chats today was not all of the Academy applicants, users have access or full access to Market Pulse. So I don't know if that's something Dan can have a look at, please, when he gets back from his birthday party.
Hi, this is Vinny. I'm sorry to chime in and interrupt
Hey,
you.
Vinny.
My
Welcome.
microphone working. Sorry about that.
Welcome, buddy. Talk us through, please.
Oh, yes. Yeah, this is Vinny. Thanks for having me. I was a little sick, actually, and so I had to take a little time away, but I've been keeping up on Bookmap. But yeah, you explained exactly the setup that we have here that you're showing on the post. I couldn't have said it better myself. Thank you.
You're kind, sir. You're kind. Bruce, anything to chip in?
No, I mean, I really like Vinny, like, and I would just like to get your feedback on it. We have been finding, like, when you do this kind of work, when we see this kind of work, like, the checklist enumerated here, and then showing it on here, that it starts to really become clear for you, and really helpful for you, that you know what you're looking for. If you have any comments on that, how helpful it's been or not been, or what has been helpful.
Yes, thank you very much again, Bruce, for asking, for some of my input. But yeah, I really found the videos actually. I can't remember exactly what they were, but there was that 33 video set that you have. It was about 3 minutes each. That's what really kind of set the foundation for me. Front running liquids, iceberg supports, liquid supports, and also the market pulse, the CVD VPI signal long. It's also in the subchart. I also found the stops and icebergs in the subchart also beneficial as well when combining that with the CVD VPI. But yeah, exactly what you said. On further to the left of the chart, we had a downtrend coming on up. It had a nice little bounce, and then we had our liquid and iceberg support. So it was really good liquid and iceberg support. There was a double support there, and I just kind of followed it straight through. It was really a nice front running liquid, which had conviction for me, and I just targeted the 8 points that are up there for 120, the 127 fib. So I am incorporating the Fibonacci's in as well that you mentioned, and so everything kind of worked out on this one.
Are you West Coast?
Well, yeah, I'm on the West Coast. Yes, yeah, but I grew up back east. Yes, I'm on the West Coast.
Okay, so this is 8:30 East Coast time. Is that right?
Yes.
Okay, great. So it is pre-market then, but by an hour or so. That's a good time.
Love pre-market stuff. You saw it today. Some really nice pre-market trades. If you're bold.
Yeah. I don't know, Stan, Jack, you guys have any more comments?
Oh, I find it great, huh? Great how the flow analyze. I like the short-term liquidity. No, that was good.
Yeah, I was waiting for you, Stan, because like is really good with the liquidity in here.
Yeah,
You know, here, look at them pulling up in here, you know, and then this is your target, and then look at them adding here, and then look at this too. Beautiful.
Brilliant.
You know, that with volume, it's going. And
yeah, true.
some really good example here.
Brilliant work, Vinny. Well done, sir.
All right.
Thank you, gentlemen. I really appreciate your input. You guys are the best.
Oh,
Thank you,
likewise,
Vinny. No, really,
likewise.
some really,
Yeah.
really good work. No, thank you, and happy to finally get to some of you guys who have been doing all this good work and attend the live event as well. Okay, so let's see. We can go back to maybe CMJ or Laura, and hold on a minute. Let's see if CMJ is in here. Please be in. No. Okay. All right.
I know Laura is like European time, so she might actually be gone. She usually watches them the next day and then we'll comment on them.
Okay, or she watches them on YouTube a lot too, I think.
Yeah.
So why don't we start with Laura, and
Yeah,
maybe
sure.
we can get some sort of feedback from her.
Yeah, well, as a usual intro, thanks, Laura, for doing this. And as I mentioned last week, traders, I've been chatting with Laura, and I'll chat with anyone, as we all will. So it's been good. I posted my comments in Discord on this earlier on, and she was then chatting to me about some of the things. She also pointed out that actually this chart is on Chicago time, David. So where in my initial analysis saying, okay, this was pre the news yesterday, this was actually post the news. So as I'd bluntly say, this is on Tom time, Bruce. This is on Chicago.
I mean, real people time.
Real people time, Chicago time. Yeah, Texan time. It's on. So, but either way, she's really developing now. We talked in the past about the boxes, about the number in the boxes to help the flow and also to help the commentaries. So it's great she's doing that. She's also, as you can see in box one, she's talking about the context of the day, what it's about. As we'll all know, or most of us know, yesterday and today really was about NVIDIA or Enron as I call it. So it's nice context she's setting out there. Would be nice, Laura, to add a zoomed out chart, again, a common theme for all of us, just so we can sort of see where we are, where the price has been. We had the print of the data came out, the market scooted down, upside in people has gone into a range. We then see volume picking up. I did talk to Laura earlier on a little bit about box 2 blocking some of that volume, so I know she's correcting that or corrected that as well. We see the build in liquidity there, Bruce, which is like 18,900. We can see that building up again, same points we just talked about with Vinny in terms of support, tick, tick, tick. Trying to be a little bit technical within that range. I'm going to be really rude, and that's not true, David. You have sort of got maybe a slightly higher low, or it's just lows and lows. I know you boys will talk about some sort of shapes, particularly on that, but it doesn't break any lower. The volume picks up there, bang at 10 o'clock, which is 11 o'clock New York time, and off we go. And it's that lovely there. And then she's taking the breakout. She's using the anchored VWAP, so same points we've mentioned about having, some voodoo, black arts, witchcraft, as we call it. And I know we had the comments in the chat last week about those remarks to lean on to. And we see the build-in liquidity. It's a common theme here, isn't it, really, at 18,950. That build-in target that we go to. Typically, you're going to get that first up, then it pulls back, comes back down to that lower liquidity, and off it goes. So it's a good chart, Laura. Really, really like the way you're developing your boxes and so forth. Adding a couple of other things now, and we're really starting to really smash it. So well done. It'd be nice to know a little bit more about trade management. I know when I've spoken to you, you very much are one and done. You're trading a single lot, but it'd be nice to know a little bit more about your thoughts on that. If we can add that in at some stage, I think that'd be quite sort of useful. And from there, right, Jack, comments, ads, please. Catch the ball.
So what really stands out to me about this chart here, honestly, is that this is one of the best images you can see to utilize the TraderMap Pro add-on and kind of get rid of some of this bounded liquidity that we see in NQ. If you'll notice, for those that don't necessarily know, wherever price goes, mirroring wherever price goes is a level of bounded liquidity. This is the market makers. They're obligated to put liquidity into the markets, especially around these areas. And those are essentially their variance points that they do this. And it'll be there in NQ the entire time, no matter what. Well, except when they pull liquidity for massive events, obviously, because
news,
that's
NFP
smart stuff. Yeah. But in general, you'll see it there all the time. What that add-on will allow you to do is it'll allow you to highlight those lower edges where you see that large band of liquidity. You can see one right below the breakout call out, and you can see kind of one above that a little bit as well. And you can get a real sense of the true liquidity within the NQ. And now that particular add-on is very, very useful for NQ for that reason right there, is because you can really see where the market makers and large dealer traders are going to be. I recommend, if you're going to trade NQ, you have a pulled out chart that utilizes the TraderMap, and it highlights these, and it only looks at those kind of like larger orders in those ways. And it doesn't even need to be big. I think 20 is enough to kind of pierce the veil for a lot of this bounded liquidity. And with that alone, you can really kind of see some of these other areas. In addition to that, the anchored VWAP, I like to put it on the most significant swings. She used the closest one, which I think is fine. I don't necessarily think it's bad by any means, but especially when you're looking at things like crypto, one of the things that I found in that challenge that we did in the Bookmap challenge was if you put it at the extrema, the maybe the one down below, just to the left of 10 a.m., or maybe even the peak that she got for the initial breakout of the range box. Either one of those, I think, might be a better area to kind of anchor that VWAP for the high or the low, and then potentially get in for that. I think on the extrema, you get a little bit better of a kind of target and entry point, more of a discounted premium, if you will. But you still need confluence. You still need the order flow in your direction.
Yeah.
But those are kind of two of the things that I've noticed with those two particular things that I think are really great areas to look at.
Great comments. As a side note, if I may, Bruce, Jack, Brent, and me were talking. You guys were sharing some sort of dealer option stuff, and I put up a TM Pro chart in, and they're just invaluable, Bruce. They really are. They really are. But we all know that. There's a great shout out there. Stan, sir.
Yeah. No, I find very great, like the images, the trade. I would maybe say about the entry. Overall, you nail it. But I wouldn't have, for me, enough confidence to take the trade. Like there is not a lot of buying cluster or relative volume to give me like potentially the good timing. So I don't know if it was more looking for to enter after an exhaustion or anything, but doesn't seem we have it. But still, it was part of your plan. You took it. You took your profits. The scale was great. So yeah, I don't know if you have anything else to say.
I think for this one, it's a little tougher to see because it's a more zoomed out look, right? Like it's 5 points wide on NQ, and 5 points in NQ can move in a split second, right? Like it could literally move that fast. So I think that because of the way the Bookmap is zoomed out, you can't really see some of that more liquidity that might be more interesting for you, Stan, for your style of visuals. But I think it's just a symptom of the way it's zoomed out in Bookmap settings, because you can dial it into the way you want it to be, kind of thing.
Yeah, true. And like, for example, for the breakout, that was highlighting, like we can, I think, clearly see like the conviction from them. Maybe not enough short-term liquidity to have the pressure, but when you see like those big cluster when the break is happening with this relative volume.
And then even that pullback at 1010 is still really interesting, right? Because it pulls back to that breakout area, but it still finds more strength for a continuation.
Yeah, exactly.
So,
yeah, true.
And the volume on the sell side really dies off, and you can really see that because the way Bruce zoomed in here, right at 1010, you can see the sell volume really plateau and die off, and then you just have very tiny volume orbs, you get a break of that anchored VWAP again, and then like you're just off to the races, capturing the upper head liquidity. So I think it's pretty interesting there.
Yeah, true. No, great job.
Yeah, I wish we can get Laura on the mic, but I know kind of what she's looking at. She's following Robert Rother, I think, quite closely, and so she's got Robert looks at the anchored VWAP, and also like he's got a very particular way of trading due to becoming a funded trader. So it's the method and the setup is different because of that. So I think she played it perfectly for what Robert is going over, because here's the reaction. You see the breakout. So she anchored it. First test, she actually kind of missed it. Second test, she got it, and then you can see like her kind of moving her stop around, or her limit around. And then she got it and then took the profit very, very quickly, and then off to the next one. So that's what Robert's doing, and I think she's following really nice. It's a good example of what exactly he's doing as well.
Yeah.
One thing on the TraderMap Pro, there's kind of an issue here. It would be great to see it, but you can't trade from it right now, unfortunately.
Yeah, you can't.
So and DNT Matter came up with some interesting ideas in the chat, but still I'm working on it. I'm working on those guys, trying to get can we trade from the TraderMap Pro chart.
Just having it even as an extra tab, just to keep an eye on, even if you're tabbing to it. I personally put it in a separate Windows desktop, and I literally just shift my Windows desktop over, take a look at those, and then pop back over, and I'm back in my main Bookmap window. The other question I would have for Laura, if she does end up watching this on YouTube, which she usually does, is that target, is it a predefined target, like were you just searching for 5 points and that's kind of what your setup was? Or were you going for that previous swing area? I think that having your exit criteria kind of listed concretely there would really help, especially because like if this is, like Bruce mentioned, a funded trader kind of setup, you want to be able to track that versus, maybe this was just a long setup that you're also using for a funded trader setup. So having that context when you go back to your journaling can be really helpful, right? Like put as much information down as you might need, not necessarily that you think you need right now. Like always expand a little bit more, because you're going to forget a lot of this stuff in 3, 4, 5 months from now. I find I forget stuff, and I haven't changed most of my setups. And I still like, what was I doing here? And I got to like pull up the replay off the archive and go, oh, I think I was doing this. So having that kind of information there of why you're exiting, why you're entering is really good. And that's kind of some of the critiques that I put on some of my stuff today too. So Laura, if you could answer that for me, I'd really appreciate it. I love hearing from you anyway.
She does kind of answer down here, target high liquidity or another level. So she's just front running, basically.
Yeah, okay. So it's probably just front running, yeah.
So, and that's another thing, Laura, like we gave this comment back to you, or feedback to you, I don't know, like a month ago or so. And immediately the next week you took it. So it was really great to enumerate your criteria and your setup. And the clarity just, it shows, I think.
Definitely.
So great stuff.
Yeah, it's very visually like just here it is. This is what I'm looking at. So I think it's great from that.
All right.
Well done, Laura. Well done.
Yeah,
well done.
yeah. CMJ, did he come back in? No. All right. So well, let's go over it, and then Stan, you'll be up next.
Perfect. So this is a Tom trade. I keep saying Tom, don't I, Tom? This is a Tom setup. So again, thank you for doing the post here, CMJ. I can see you do a lot of posts in Tom's room as well as in the academy. So really appreciate all the fine work that you're doing here. This is a textbook setup for sure in terms of an IB failure. We've got a little bit of a range on the left, as we can all see. You then get that breakdown. We've got some selling that just stalls. We then see the buying coming in, as you've rightly marked the chart, fantastic. We see the green volume bars are picking up. You've got your eye on the price in terms of a VPOC. The price had also sort of, it's within that low of the day, the LOD area, so a natural area to expect a rebound of 180 as people take profits, whatever sort of trades they've been doing. You front run a couple of ticks in terms of VPOCs, exactly what we saw Laura doing and other traders do, and we all do ourselves typically on our main setup. On that point, would be nice to know a little bit more, as Jack was mentioning about Laura, in terms of sort of that trade management, in terms of scaling in, scaling out, and so forth. Usual comments as well would be nice to perhaps have a zoomed out sort of view, a little bit of context on that, what the day's about, etc., etc. This was Tuesday, so we had some jobs numbers came out, but this is mid-morning. This is New York time, that's right, this is mid-morning. And on the far right of the chart, Bruce, this is then heading towards our favoured European close. I'll add in the comment that we've been using a fair bit, Bruce, in terms of sort of market pulse, pace of bids, but I respect Tom's setups and what he's doing and so forth, and how we use the tools individually. What's curious for me here is that there was a second trade here. I appreciate where you came out as marked with the orange arrow in the sort of middle of the chart there, Bruce. The price then comes back down, doesn't get back down to that low of the day, scoots around a bit. I'm going to exaggerate again, saying it's a higher low, and you're all screaming, "No, it's bloody not, David."
I call it a higher low too, David. So don't let them attack you. They're going to come at both of us.
Yeah, it's definitely a higher low. We see some lovely volume just after 11:15, or the same sort of volume kicking through, and off we go to the races. Off we got a VWAP up there. We got some more, witchcraft and black cats to go at. That would have been a trade. I'd have been in there for another 7 handles. On that thread of 7 handles, as we've all talked about over the previous weeks, full respect. If you're in this market and you're taking 3 handles out, 4 handles out, 5 handles out, or points as perhaps I should call them, brilliant. You can make a very, very good living. I don't know if Tom still posts a picture of that yacht, his broker's yacht in Chicago in one of the harbors he'd put up, as sort of joking about all these scalping and fees. But hey, enjoy it, use your setups, and this is a great example, Bruce, of that, where you're using your checklist, you're working through, you know what you're doing, you're working your craft, you're taking money out as you believe. You haven't taken the second trade that I might do, or Jack may take, or Stan may take. You've taken that and you've walked away green. Fantastic on you. Fantastic on you. Jack, thoughts, comments, please, sir.
So this is a great setup. And the reason I call it a great setup is because it highlights something that I constantly call out, and I've called out this week too, in mean reversion trades.
Yeah.
Mean reversion means you're counter trend trading. You need to get that in your head. There's nothing wrong with it, but understand you're on the opposite side of the market. So when you're on the opposite side of the market, you need confluence, you need tools, you need things to really signify that, okay, we're reverting back to the market. I can get in here relatively safely. It's never 100%, but you reduce your risk by adding those confluences here. And we can see what he's saying here with the selling exhaustion, and he's specifically calling it out. And we can see it multiple times as that volume is building up on the buy side for that entry, breaking up. He scaled out, went risk neutral. He's allowed to take the rest of it all the way towards VPOC, front runs VPOC. This is fantastic. This is what I like to see for mean reversion, because it's not just going, okay, we're so far away from VPOC or whatever black magic voodoo we are, that surely at some point we're going to walk back. Yeah. And right now it works really, really well because we have very range bound markets. We have a lot of market indecision. But if we get out of this rate height cycle and we get out of this, like moving from data point to data point cycle, we're going to get into a market that just starts trending. And those mean reversion traders that come out of the woodworks, and we see them constantly every year go, mean reversion doesn't work. Your technical analysis doesn't work. It's all bad. It's all the end of the world. it's all fugazi and the market makers are just trying to pull the rug on you and all the other things, right? And it's just because like, well, no, it's a trending market. Like, use the market conditions to your advantage, use the tools to your advantage. We got seller exhaustion here. We got a great reason to be long. We're rejecting the higher liquidity below. Look at that huge amount of liquidity at 52.74. We're running away from that.
Yeah.
We went back to it and didn't even make a lower low. This is a great reason to be long, right? So yeah, there's a lot of confluence here. And this is the kind of mean reversion trading that I'd like to see called out. And like, if you're a mean reversion trader and those are like your bread and butter setups, these are the things I want you looking for in the order flow. What order flow are you getting from Bookmap that helps you with confluence on this trade? Whether it's with these, with the footprint, with market pulse, whatever. This is fantastic. This is a great example, CMJ.
Well done, sir. Stan, please.
Yeah. No, yeah, but I think you said quite everything. It's really great to see like the order flow analyze. I would maybe just say to give you more confidence when you have closer short-term, when the short-term liquidity really like is sticking to the price and is trying to push it with quite the same conviction as the big one just below it. But still, yeah, you nailed it.
Very much, very much. Back to you, Bruce, I think, please.
Yeah, I mean, I'll try to be objective about this and not rain on the parade, though. I don't see it. Sorry, it's here that I just don't see in the entry. To me, and seeing this kind of strength in volume, a little bit of just it's a shallow pullback. There's not much buy volume in here, and then there's another cluster of selling here. I don't see the exhaustion. To me, it looks like it really wants to go here. Now I know you've got your IB, lows and highs and all that kind of stuff in here. That's something else, though. I just don't see the order flow around it. Yeah,
I definitely see it. I definitely see the exhaustion right there. I'd be hitting the buy button as fast as they'd let me.
Yeah,
especially because like even on the pullback with the next spike of sell volume down below, all it does is tag the previous low. Like it trickles out, and like you can see the volume in the dots right at the orange arrow, just like the volume just evaporates right there. And then all of a sudden
you see some here, but is there enough buy volume in here?
You don't. In this particular case, I don't think you're looking for necessarily buy volume. You're looking for the absence of sell volume. So the pressure that you got before, that's completely let off. The wind is now in your face, and that's why it's a good potential reversion setup. That's exactly what I look for on these particular setups. Is that it's not that I'm looking for necessarily buyers to take hold or anything. I'm looking for sellers to not have any strength left, and especially going into that lower area of liquidity. It's basically running away from it. The way
I just been stopped out way too many times on these kinds. I like it over here a lot, because this came up. I mean, here it made an equal high, and then we have the higher low here. We do see the buying strength starting to come in, and then here, look at the sellers in this area in here. I just don't see a lot. I start to see the buy strength coming in now. So, I would look for. I would probably take the same target as you did, top of the range, at least some, and then might try to get for more continuation here. But that's my take on it.
That's fair. We're all golfers, as I said last week, Bruce. We're all golfers.
Yeah. No, I mean, it just the structure. I mean, I can't see what's happening over here, but it looks like we're coming down, right? And I just been run over too many times in here. But once we start to see that this happens, it looks much better to me. The equal high as well, back up to here. But anyway, it worked out. And again, like, if you're looking at something like this on your higher time frame, and you've got data on this, that's something different. So just reiterate that or underscore that, and then we'll move on. So Stan, are you do you have your spreadsheet or your Notion file?
Yeah. Should be good now.
Okay,
Thanks to
let's
Jack.
take a quick look. Oh, Stan, thank you. Excellent. This is so much easier. All right,
Stan did this all by himself.
you did it, didn't you?
Nope.
Oh, you did, Stan. Okay, excellent. Stan, take it away.
Great job, Stan.
Yeah, perfect. So yeah, we can clearly see like just above it, above in the Notion, like just above the picture, like he made a huge description about what he was looking for, how he was, what was the intention to enter the trade, what was the context. So it's really what a trading journal might look actually, and I find very great to see every time his kind of trading journal on every trade that he will post. What he's looking for, so his kind of checklist, the liquidity offer, applying his reversal pattern, all the confluences, the order flow that he's looking for, and then we can see the chart. So the first one. So we will more have like his execution and the candle pattern, and then we can go directly through Bookmap.
Okay.
Yeah, sorry. And see what he explained just before in his checklist. So I find very great like the other flow that he was highlighting, the absorption on the high. It wasn't into big liquidity. It potentially be iceberg. I have no idea about it, but clearly we had buyer over there. Then we broke his trend line, and we get the exactly, and the price check and reject the supply with low conviction. That we can clearly see. About the other flow, I would just say like the exhaustion that you point out, I wouldn't call especially an exhaustion if we are looking to the relative volume. And I set a green rectangle where I would call it an exhaustion. We can clearly see just below. Yeah, exactly. Yeah, there. I would say there you would have your exhaustion, like the relative volume is clearly off, plus no transaction on the top. I would say that for an exhaustion.
You mean this transaction here? Is that what you're talking about? That is
No,
not exhaustion.
Yeah, exactly. Yeah.
Okay.
What he was highlighting as exhaustion, I wouldn't. So I don't know if it's maybe more.
That volume dot could be really big, blocking it out.
Exactly. And if it's maybe not enough in a zoomed view to clearly see like the
Yeah.
exhaustion.
Right.
Because he's at a 1 point spot, so it
Exactly.
definitely could be that.
Yeah, but
Because you can see a little bit of a flag at the top of it, right? So it does stand out a little.
yeah, but like this, it seems more exhaustion below clearly with the relative volume and the transaction. One more thing, so I don't know. I know like you are entering in the 1, 2, 3 pattern, and so I guess you set a stop order due to this fact. So I guess at the third leg you enter directly when it will break. And so I was potentially mentioning to enter with the seller's conviction, then would potentially appear a little bit later, exactly, to give you this confidence. And I think it's where book might be a very powerful tool, is to catch the timing. And by looking at those relative volume and clusters, it can really give you a good opportunity, and it should work in as it works now actually, directly goes in your favor. But still I don't know if you're there and if you have anything to say about your entry.
I do think that it's kind of a good point here, though, between both of these is to kind of look at exhaustion in two venues, right? The first one, the top one that you were talking about, is a high volume exhaustion, right? Because you've got a lot of volume interacting there. And it kind of can have different price action than like low volume exhaustion, right? And we can see that really empirically here, where like high volume, we kind of like really kind of butt up against the level, but that lower volume exhaustion, it can kind of just melt lower, right? So looking at it in two different ways could be really kind of important there, as you mentioned.
Honestly, guys, and as you know from my ongoing questions about it, I've had a pretty tough time understanding absorption and exhaustion and the difference between the two. So what you just said, Stan, where you pointed out the big green candle, and then you just pointed out the exhaustion with no volume, that really helps. Thank you for that. That really helps.
In here, or in here, is that
Well, that where you have the pencil, that's the one that where Stan said, "Look at the volume." There's no volume there,
right?
so that makes a lot of sense to me. But I've never really put that together before, and I have had a lot of confusion between absorption and exhaustion.
Okay. Well, I mean, just the long short of it, like exhaustion is the lack of aggressor, and this is Stan, as Stan pointed out, it's a really good example. So there's just no buying, and but it has nothing to do with liquidity. There might be high liquidity there or not, doesn't matter. It's just the lack of aggressor activity. And then absorption would be, something like I don't really see anything up here, but like Stan said, it might be a big iceberg or something. But basically, that there's high liquidity, the market trades into it, and it just there's way more sellers up here. There's not enough buyers here, and not enough demand to cut through that supply. They completely absorb all of that buying, and then you'll usually get a pullback or a reversal.
I find it interesting that there's no liquidity on those prior two big fat green bubbles. I have a very aggressive low time frame supply zone that printed about an hour before the euro open during the ETH session. ETH opened, it traded super flat until that hour before the euro opened, where I have that low time frame supply print, and price really reacts to it aggressively. When it revisits it after the bell for that JOLTS data release, it runs right to it and pivots right off of it.
Yeah.
It comes back to, I don't know, right around the 50% retracement of that big green candle there, and then it runs right back to that supply zone and reacts to it, and then the liquidity comes in after the fact. That's really interesting to me. I'm gonna continue to look for that.
Yeah, that's great. I mean, you I don't know what's going on up here exactly. It's kind of hard to see, but I mean, certainly this was data at 10 a.m. East Coast time.
Yeah, that was the JOLTS, whatever
JOLTS.
JOLTS is, I don't know, but
Okay.
that was it.
10
Okay.
o'clock, yeah. That's it.
Yeah. I mean, beautiful exit. Way to go.
I have a question for you guys as far as limit orders, right? I use Stan mentioned this in a chat in the thread. I typically use a stop limit as my entry because I want to enter into the strength of that move south rather than try and catch it as price is moving up and then reject it. And I know I'm giving up the spread in that entry, but is there another way to catch that entry with the limit order? There's not, correct?
I don't think there is. Yeah.
not
A normal stop will slip. Or yeah.
Yeah, except maybe if you already go in a zoomed view and trying to catch yeah, I don't know, it will be tough with a limit.
yeah.
Maybe more in scalping or things, but
Agreed. I mean, one thing you can do, Shark, is it's you would have to trade from the buttons here. But you know, for example, if you want to go short, you would sell on the best bid. So
Okay,
you
then
will
I just then
I
I
mean,
just need price to move a tick to catch it,
well,
right?
no, I mean you'll get filled immediately, most likely. But I mean it's really no different than market. But anyway, this could be a good trick to maybe save a tick every now and then.
yeah,
You know, just or maybe just put it on the ask. You know, the best ask, and hope that it's not too deep. You get filled, and then it goes your way.
I may
Else,
try it. I enter and exit all my orders on the DOM, and like I mentioned, and I think I mentioned it in that trade or the trade the previous day. I occasionally fumble my execution. You know, I'll confuse my right finger from my left finger, or I'm so used to entering short because that's 9 out of 10 trades for me that occasionally I'll enter a short when I intend to enter a long or something like that. But it always works out somehow.
Perfect. So
that
do you put two lots on here?
This trade,
Yeah.
looks like it. One here, right, and then one down here. Or maybe you
Yeah.
added. I don't know.
no,
Or no,
that
you didn't
that
add. You
that
didn't add.
should have, in hindsight, I was thinking that should have been an ad at 3 points, that second yellow circle. But I think I entered with 5 lots, and then I took two or
Ooh,
three off, and then I
lovely.
took the rest off the bottom.
Okay. Okay. Yeah. Nice. Very nice.
Right. Any other comments?
no, for me that's good for already. That's a great job, a great consistent.
Yeah,
It's
nice trade.
always the
Nice trade.
same. I don't know if David, you have anything to say?
No, I just compliment. I like the time setting you've put in there. I like the earlier chart in terms of the larger frame, which is great. You're talking about the news. You know, I know we all look out for the news. I hope we all do. I take most of my dates off investing.com. There's loads of other sites, and then I've got my audio squawk telling me like news result in 1 minute, 5 minutes, that sort of thing. So I don't actually have to look at anything. So it's nice to hear you talking, you're understanding what is going on, and whether we believe in the data or not, whether it's going to move the market or not, you need to be aware of it. And that is great to hear you talking about that. So well done.
I know a lot of people just avoid it altogether, and I get that.
Yeah.
I see so much opportunity though in those moves after the data releases. I'd rather try and study them, trade them a little bit, and figure out how I can take advantage of those bigger moves.
Big time. And to those things, I'm using Jexine it many times. I use Ninja to run it all for myself. I put in my stop limit orders, and I put them above and below where the price action is, and I'm playing around to the last sort of seconds. Then I press execute on Blackbird, and I let it take care of itself. And yeah, I'll not always, but the system snags those moves. So yeah, I love the trade in the news for sure. So well done, you. Good stuff. Good shots.
Well, thank you guys for the insight. I appreciate it very much.
Oh, well done. Well done.
I don't know if Jack, you have anything to add?
No, mostly was already there. What I do like is SharkBlue always has like very, very in-depth information. You can always see exactly what he's doing. He really does treat it like a journal, and I really appreciate that. But you mentioned that at the start.
Yeah, I would
Thanks,
just say
guys.
one more comment, and I got to have the last word on this one.
Yes, boss.
No. I mean, your entry, like I don't know. I mean, like this. I find it kind of scary. Like here, big move to the upside, and the pullback 50% or less, and then it does come back up here, slightly breach it. And then in here you can see it, and you can also see it in Bookmap here. I mean, this is another kind of It's looking like an impulse move. Coming back to here, and then I would be kind of worried in here that we'd get that move to the upside. But
I was definitely worried.
Twitching like a rabbit.
And my stop, you see my stop up there right above the trend line pivot high.
Yeah.
And once I took the 3-point scale, I moved the stop down to where I entered.
Yeah,
just so I wouldn't give back whatever I pulled out of there.
Yeah.
Nice.
Yeah,
that's
the
great.
brokers.
Yeah.
And for full transparency here, this was a trade in replay. I took this trade live on Tradeovate, and it played out pretty much like this, but it wasn't as tight around the edges.
Oh, that's great. I'm really happy to hear that, actually, Shark, because maybe a comment on that. How do you like using that replay to retrade?
Oh, this is the best. You could journal all you want, but to come back in and actually trade it again and kind of think, okay, what did I do good? Yeah, I did this great, but what did I do not so good? Because I coulda, woulda, and I should have done this instead. It's just as good as a learning tool can get.
Yeah, that's great to hear. I mean, and that's what Rob is going to go over tomorrow at 10 a.m. East Coast. So how he uses his process. Heck, I mean, we can open the mic maybe for you or something as well. But really, really good to hear about that with the replay mode. It really is a great tool, and just retrade it, back it up again, retrade it again if you want, until you get it down. Nice work.
Yes,
Thanks, guys. Appreciate the insight. Thank you much.
You too.
All right, and Stan, next one.
So yeah, we'll go through Steven.
Yeah.
Slides. So I don't know if he's here. I think.
Yes, he is. I think he is. He was. There he is. I got him. Come on in, Steven. There you go.
Hello there.
Hey. So wait, I'll start. So yeah, I find great too. Like the notes then he will post for his trades, like how the market opened, the context, what happened, to have a different view of the market, like a zoom view and extended view. It's good to see again, like the highlighting of the short-term liquidity, the relative volume, where he took part of it and where he exit. He clearly recognized like the short-term. Yeah, he would probably had more potential if he had more short-term liquidity, like the yellow rectangle circle.
I'm sorry. Where, Stan?
Yeah, the yellow circle. Yeah, exactly. Yeah, he clearly highlighted.
This one?
No.
The circle.
Oh, the circle.
Yeah,
Circle. Gotcha.
Yeah, sorry.
Okay. All right. Okay. Yeah.
In the middle.
Yeah.
So yeah, he clearly knows what he was looking for. You haven't set any checklist in this case, but I guess like due to the fact that you are posting a lot and watching the same, like what you are looking for. So yeah, for me, like the entry was clearly good. You enter with bias and all the conviction that you could have. Maybe not enough short-term liquidity, but still you had a small move. I don't know what makes you exiting at this time. Before you target, it seems like you nailed the reverse.
Yeah, I noticed on the Dom Pro that the buyers were struggling, and I saw that the sellers were coming in. So I just exited. I was a bit aggressive. In hindsight, I don't think this was the best trade, but the liquidity on the bottom there, on the bid, that kind of like gave me conviction, like, okay, maybe this is a good move. But the sellers obviously came in and took it out. Yeah, I actually nailed this Luckily, I got out and before it like went into the minus. Yeah, I was actually a bit aggressive on this.
But but still, you managed to exit at a good time. You took a small profit. Yeah, overall, I think it's a really good trade, even if it went against you. Great confluences. Yeah, don't know what to say. I think you mastered the other flow too. So
Not my ideal setup. You can see with the green line there, I was going for it was like a mean reversion to the VPOC, but buyers weren't there. But if you check on my other slide, you'll see like my initial idea, but it didn't pan out. But,
I do think that while it is an aggressive trade, like there's a lot of confluence, like Stan's mentioning here. Like you're entering long off of essentially a breakout after consolidation, right? So like there's a lot of value in kind of entering a trade like that. And then you're watching the order flow, you see that the buyers aren't there, but you've already got a couple of ticks of profit. So it's like, okay, well, let me take what I've got right now. And if there's a better setup, I can come back in, right?
yeah,
And
that
then-
was the idea.
yeah. And then there just wasn't a better setup. And that happens at times. But like that's why some of this order flow is kind of important, right? Is you can take more of an aggressive entry and then, you know, if you don't see something there, adjust. You don't necessarily need to be rigid to your, you know, I need like a 50,000 to 6 risk reward kind of thing.
Right.
Or, you know, like see what you get sometimes and, you know, be responsible with your risk management. My question is kind of, we don't see it on this. Where were you looking like, okay, this is a dead trade, I need to get out immediately? Like where's your stop at kind of in your image there? I don't see it at all.
Usually it's a 3-point stop.
Okay.
But I was like Bruce always says, you know, I can always get in at a better price. So that was the mindset. I didn't get enough time to upload a second slide, but I did take another shot just before 10:15. As you can see, the sellers came in, took out that liquidity, and then it kind of bounced, and then a bit of a higher low. I got in very similar to the initial setup. Yeah, right there where you have the pen. I got in there again, and I got a bigger profit out of this one.
Yeah.
And then, so there's a bit of heat map context that's missing out, but it was like kind of channeling between 302 and 30625, and then eventually it never took out that 30625 level. That became resistance, and it also sold off. I actually got out again at that level. I actually hit it perfectly, and it was the Dom Pro that helped me.
So
and then the sellers just came in, as you can see on that.
I don't know if these are the same days, but kind of looking at like CMJ's trade and this, it's very similar, right? Like you're entering long, and then you get the pullback to the liquidity, and then it kind of goes away, and then it retests that liquidity, and then you get a nice little long out of it, kind of at that 10-12 mark, like you mentioned. It's a very similar kind of setup, right? Like it attacked the liquidity is gone, it went back, there's nobody really there that's kind of, you know, going sideways for a little, and then low volume, and then you get a push higher. So it's kind of very similar kind of setup for the second one that you ended up taking.
Yeah, over the weekend I'll definitely catch up with some more slides.
Perfect.
David.
I like. Well, it's more the general trading, so it's lovely hearing you trade like we've had with many of the traders. It's hearing you talk about what you're looking to do. It didn't work out, as happens for all of us every day, and yet you're reloading. You're getting another clip, and you put it in there, and you're getting on with it. Fantastic. You're not sitting on your hands thinking, oh damn, I don't know what I'm doing. You're going, okay, yeah. Where's the next trade? Where's the next bubbles to play from? Brilliant. Well done. Like it.
Thank you.
Welcome.
Just a couple of comments on here. Shark, you did the same thing. Like something really nice here. Stephen, you're really doing it. Is the zoom out and showing it here, showing the bigger picture in here. You have another image, and this is really great because look at this picture within picture type of thing. I know this takes a lot of time and effort. You got your candlestick over here. but it really helps gauge. And I think something in here, but like, there's like you getting really aggressive here, like you said. I actually think that for your take profit up here, it's not bad at all, because this is a really fractal move in the bigger picture. I mean, look at this thing here. Look at all of this liquidity. Trades down through. You got news. It's still down low, and you're going long. I really like that. This is where the sellers came in. You started to see a little weakness. You got out. And you're not looking for a big move out of something like that. In fact, the trend is still to the downside. And then you got it. I really like, again, like lovely stuff. You got in down here after seeing this, again, buying pressure, but just take it up to the top of the range. You got your liquidity target. You got your range there. Beautiful.
Yeah.
Before you go, Stephen, I think that's kind of really important with mean reversion trades is don't look for a huge move, right? Like take what you get, and then if you don't get any more, exit the trade. There's a lot of people who will hold on to a winner, and it turns into a full loss loser because they're set at looking for the 7 points or trying to capture the whole move. And it's like David said, there's a lot of people who made a lot of living off of making 2 points at a time. So put it in scope. So
yeah, very much. Wise words.
And not only that, Stephen, I mean, like, the more that you trade like this, you'll burn through it. I got to get aggressive. I got to get in. But just keep going. Keep doing it. And then pretty soon you get to the point where, I think it will do this, but I'm going to hold for something bigger. Maybe you get like that, or maybe you're just scalping, all day long. But you're building tremendous experience by taking these trades.
Definitely.
And that's worthy to note, I think.
Yeah. I noted this because I was like, okay, it worked out, but in terms of context, I was maybe a little off because actually the market was bearish. But you only see this in hindsight. But in terms of order flow, it still hit the right checkpoints and all that, except for the first setup. There wasn't enough skew. But on the second setup, it was beautiful, but they still exhausted on the ask side. But so what I'm trying to do, I'm trying to capture that.
Yeah, I mean, but then look what you've taken away and look what you've learned and the confidence you're starting to build.
Yeah.
Right.
So and there'll be losses, but you'll be able to kind of shake them off. And I mean, there's always going to be losses. But it's like, what you're looking for, take it again, and it's a 50-50 outcome. But that you have an edge because of what you've studied. That's kind of the key. I don't know.
Right. Yeah. No, I get it.
True.
All right.
Good stuff.
All right. Thanks, guys.
Yeah, really, really nice collection of images there. Let's see. Questo Mondo, are you in here?
I'm not sure. I haven't seen.
No, I don't think so. He was in last week. He's new, and that's why we wanted to cover some of this stuff. Anyway, I can tell you one thing right off the bat. You got to get full depth of data. This is old Bookmap. Like years ago when we first started, there was no full depth, and you can see that it's like the NASDAQ or something. This is the NASDAQ, right? Yeah, and like it's that 10 points away liquidity basically, or 10 ticks.
This is what your brokerage will show you a lot of times in the just the normal
in the dome
price ladder. Yeah, it's not great. It's not
free
great.
data.
yeah, and the way we used to do it is what was, all of this area in here, it would show liquidity that was historical, but we don't know, it wasn't updated. Once price came back up here, then this would update and we'd get new information. But anyway, the full depth, it was just like a revelation. Anyway, Stan, take it away.
Yeah, perfect. So, yeah, so he's new. So I would recommend firstly to trying to identify what you can see on your chart about the order flow. As Bruce mentioned, the slowdown walk, like what he went through and how he was highlighting. And I think it's what's important in the first time is maybe trying to identify what's happening in the market, like for example, the transaction into the liquidity, some losing conviction. I don't know. Yeah, there is a relative volume to add it in confluence of your analysis. So yeah, just trying to take advantage of Bookmap too, but what's happening into your chart with the liquidity too. I mean, yeah, I would just advise you to start there at the beginning. Overall, still it's great. You took a good entry. We can see your entry at the bottom with some bias after sellers transacted new liquidity. You took the trade. You took a perfect exit at the top. Yeah, that's good. I would maybe say more short-term liquidity. Overall, you got your buying cluster. I don't know if we can see below with the relative volume. If it could maybe give you more confidence in it. Yeah, perfect. They went lower with volume and then bias directly pick it up. You took it. You took a perfect exit. You're using ERS correlation, so that's good too. I think Jack will have a lot of to say with it. But still, that's great. Just keep posting, keep highlighting things on your charts, and keep trading through Bookmap, trying to make a checklist, more a zoomed view. The zoom to have more context, but still, thanks for posting. I don't know if you have anything to say.
I think that something like we can see that, it's obviously a newer user and stuff. Make sure when you're having your journaling images, make sure you really like list what you're looking for. Like, why were you long here? Was this long because you just like the number? Was it long because some hopscotch pattern? Whatever it is, write it down on the image, because when you're going to come back to this image weeks, days, months, years from now, you need to be able to figure out what you were doing and why you were doing it, because this worked, right? Like, this is what you want to repeat. You got long, you made money, great job. What did you do exactly, and why did you do it, and can you duplicate it? And these are the things that we're trying to really focus on kind of in the academy, and that's kind of one of the things we hamper on a lot, is because we want you to have repeat success. We don't want you just to, make your rent payment this month. We want you to be able to, if you want to make this a career, be able to do so. So pushing you to kind of annotate these things in the right way is really, really important. It's great that you're, taking a trade in Bookmap and showing those things. Even if you weren't, you could highlight it however you want to do it, but put as much information in the chart as you possibly can. Even if you don't think it's important, or even if you don't know if it's important, highlight what you see there, because we've had users like this before where we prune it down, because now we can see all the things that you're looking at, even if it's after the fact, and we can kind of relate what you were doing to what you're seeing also, and can kind of give you more guidance. If we don't have that information, though, it's very, very tough to give you guidance on stuff.
All right. Any other comments?
Just to thank for the chart, really, Bruce, and initial chart and so forth. And thank you for taking the time. And nice to see an MNQ chart as well. That's a good toe into trading the wild west of NQ, that's for sure. So well done. No, some good pointers from the team here. So yeah, we look forward to seeing your next chart.
Right. Well, thank you, Stan.
That's it.
Yeah.
Pleasure.
Yeah. Great stuff. And
all the charts. Thanks, guys.
yeah, absolutely. Jack, you are
Yes, sir.
up.
Yes, sir. You have mine?
Yep.
Okay, so I had 3 guys this week, and one of them is here, I believe.
Rubicon.
He was earlier.
Yeah.
He was doing the kiddos thing. Rubicon, really great stuff here overall. Let me pull up what I had here.
Here he is. I got him. And
Cool.
CMJ, you missed it. We were calling for you, but
We chastised him in the Academy chat.
Okay.
Yeah.
Anyway,
we properly scolded him for missing out, and we all laughed. It was quite great. It was good community spirit. So one of the great things here is we can see Rubicon Trader. He's looking at higher time frame, and really at the top there, this kind of signals out something that we were mentioning, what he's looking for right away in his image, right? Like he's looking for a mean reversion trade from a higher time frame and an intraday level. And like we've got all that information in a nice little block right there. Also, we can see some more colloquial, like short-term kind of stuff, which is like he rushed his entry. He took a small stop out. He still had his setup. He entered again, and he was good. These are really important concepts too, because again, when you come back to that, you know today that you made a bad entry. You know you rushed, but are you going to remember that weeks and months from now when you're trying to analyze these and kind of maybe you go back and do a Rob setup where you're replaying this particular day and you go and look at your notes and go, oh yeah, I traded this day. Did I make the same trade? Did you make the same mistake even? Things like that. These are kind of really important. No worries, Rubicon. You can always ask questions in DMs and stuff or in the Academy channel. But this is really great here. Aside from that, one of the kind of little nitpicky things, I put it at the bottom of his notes. There's a lot of like just small misspellings and stuff. When you're pushing these things out to, public and stuff, you kind of want to make sure that some of your basic spelling isn't messed up. Take a little bit of time, read it again, double check yourself there. Aside from that, there wasn't really too much nitpicky things there. Looking at the order flow specifically, right above your pin there, Bruce, you can see the micro high volume node that he's leaning on. If you can highlight that node in the green box right there, you can see that your entry is essentially within the chop zone, wherever your volume node is. Generally speaking, when you have a larger volume node, you don't want to enter until you get a break above or below those, because you want to make that kind of low volume move to the next high volume node kind of setup if you're looking for those. And this was kind of, like you said, aggressive. So I assume you kind of took that into consideration. But if you look at the volume node directly below, about 5286, you can see that it built up there a little bit. But you also have it built up all the way back at 738 on your chart time. So looking at where you're exiting from the previous volume node short, you have a good target for the next volume node. And now this can be really good if you're one of those traders who trades multiple lots. Maybe you trade, instead of trading one ES, Crash mentioned this a while ago, he trades a lot of MES. That way you can scale in and scale out. You will pay a little bit more in commissions, but you're able to kind of ride those runners a little bit more, and scaling out or scaling in will enable you to kind of take profit and kind of lean on the order flow visuals. And I do think that could be really particularly useful here. Obviously, if you're in a funded trader kind of thing and you've got to worry about, trailing drawdowns and things like that, it gets a little bit more cumbersome, right? Because you can't really have too much of a trailing drawdown buildup. So it kind of hit or miss on whether or not that specifically matters for you. And that's kind of really the bulk of what I've got here. The other main thing that I want to kind of highlight is this is a mean reversion trade. It doesn't necessarily look like it. I know he calls it out, but this is a big reason of your counter trend. Why are you counter trend? What is making you want to be short here? Because if you look at the volume down at the bottom at 740, that's a good move on good volume. So why are we looking short necessarily? And I know that there's a lot of levels that are back tested, and 68% of the time when it breaks and fails the IB high, it's going to revert back. But 68% of the time is still not great, right? Like you want to add 70, 80, 90% pop if you can, probability of profit. And how you get there for those things is try to trade with trend direction, try to avoid counter trend trades. When you do trade counter trend trades, try to add a lot of confluence in there. And I really don't see a lot of necessary order flow confluence here. So kind of really look into what the order flow specifically is telling you to be counter trend, other than, oh yeah, we just didn't break this level and I want to short now. What order flow are you seeing? What techniques? Is there exhaustion? Is there absorption? Is there high levels of liquidity that is following price as it stagger steps down to kind of help you down to give you those entries? Are you taking a breakout entry, or are you entering after consolidation? All of these things kind of add in. So it's kind of really important to kind of look for there. I don't particularly like it as a mean reversion trade because I don't have any order flow here. But at the same time, your visual is very different than what I use. So it's tough because maybe you're looking at specific things that I don't necessarily see visually on my chart. So maybe you need to add them there, or give us the reasons why you're looking for mean reversion kind of thing. But that's mainly the things that stood out to me on this one. David, Bruce, what about you guys?
Stan on the order flow. I'm sure Stan would back up what you said. Sorry to cut you off, David.
What'd you say, Bruce? I didn't hear you.
I think Stan would back. I totally agree with what you said, Jack,
Yeah.
and I think Stan would say exactly the same.
Exactly. Yeah.
Well, I agree a lot with what Stan says because he likes liquidity to kind of like add into stuff. I don't particularly. This is really nitpicky. This is like super in the weeds. I don't necessarily look at overhead liquidity as so much as order flow specifically. When I look at order flow, I'm like looking at the actual transactions or the failed transactions, the bid-ask spread specifically. But yeah, exactly what Stan is kind of looks at in general. Stan, what do you got here, buddy?
Yeah, but as you said, actually, not a lot of order flow confluence when we're trying to enter. Actually, I would potentially consider to look at this pattern where he took the scale and then wait for the pullback with sort of exhaustion.
Yeah.
Then
like I could see like a double topping pattern to kind of like get into it, because at that point you've rejected, right? So like even if you're not necessarily looking at specific order flow or specific liquidity, like you've got some interaction there. Yeah, I totally agree there.
Yeah, true. And it's like liquidity, you can maybe compare it like two different army, and like the market, just the soldier. And we can see like the red army seems more advanced at this time on the top and trying to potentially push down. And you have the buyer soldier trying to take some ground and can go further, and then sellers just come back and not enough buyers to lift it, and sellers add more in there with volume. I would potentially try to enter it, and it's why I looking like liquidity as order flow confluence too. It seems like more two different army, and let's see which one I can give you more.
Like we can see that there's overhead liquidity, and like I do agree that short is like where I would be looking visually, like just seeing that overhead liquidity. But like actual traded entries, all I see is chop, right? And like,
oh yeah, true.
I don't like chop. Chop's not my friend. I don't want to be around chop. Chop sucks. So, but like a double topping pattern, yeah. I mean, I've taken double topping pattern, rejecting lower, and not look back at it, right? I think David has too, probably. Oh yeah, this is a great level. Nobody wants to be here. I'm going to short it.
I'll get in there. Yeah, it's very bold entry for me.
For sure.
Full respect the 742 short on there. I'm not seeing it myself now. Maybe You know, you, me, Jack, we're looking at some other charts, we're looking at some of the fangs and so forth, and we see something going south on that, and we think, yeah, we're going to get ahead of the curve, but I'm not seeing it on this chart. I do like the color in the chart. I know you think,
I hate the color in the chart.
What's
But
David
it's,
on?
that's,
I love the color. I use monochrome a bit, but go on, Jack.
I mean, it's great because Bookmap allows you to kind of customize it to your use. I actually looked at this image longer than I looked at probably all of the rest of the images that I coached this week and all of the images last week, because it's just a foreign view to me. But that's not. There's nothing wrong with that. Yes, I do think that if you are going to be short, like there is potential there, but it isn't chop. The only way I would even look short on this is with an options trade, where I'm okay paying the time man to kind of let my trade materialize. But with spot directly, man, this would be tough because this is very aggressive without like actually seeing order flow.
It's more of a punt, isn't it, than a trade? I say that respectfully, more of a punt.
Yeah, like if I was short a call spread here, I could see it, right? Like if I was in the 52.95 call spread, with a short credit call spread, I see that all day because that overhead liquidity is like a nice, beautiful blanket.
Yeah.
And if we're going to break ahead of that, I'll be able to delta hedge my position very well. But with spot, that's 100 hard deltas in a hurry, and you're going to take a short pretty quick in drawdown. So it's rough. To kind of answer that, we had a YouTube question. I kind of want to answer this verbally so Regime can hear it, so I don't have to type it. Regime, every day around lunchtime, a little bit before lunch, there's Tom B's Trader Lab in the live channel on Bookmap, and then right after that you have Doug. Doug does things a little bit differently, but still uses Bookmap very directly, and those are every day. And then Bruce, pretty much 3 times a week, will be early in the morning. I want to say 9:30, but I always mix up the time zones. And you can look at those, and you can look at the schedule there. It's pretty consistent there. All 3 of those guys will generally show very different stuff. Bruce's is probably the most interactive when it comes to like YouTube stuff, because he's going to look at all markets. It doesn't matter what you want to look at. You toss it in chat, he's going to throw it up on the screen and give you, there's the schedule right there. So if any of those kind of fit what you like, those are available. And then any one of the coaches at any time, just ping them in the Academy channel and they'll talk you through stuff. We all want to interact. We all love interacting. It's why we do this stuff. So feel free to ask those questions. But that was a YouTube question I wanted to hit on real quick. Sorry about that, guys.
No, good man. Good man.
Thanks, Bruce. Little teamwork there. I saw you.
I'm trying.
But yeah, so the from the order flow standpoint, and this is, looking at that high volume node that he's got in the green box, entering short or long in a high volume node. A high volume node tells you that you're trading a lot in this node. And at any moment, heavy buyers, heavy sellers could enter in that, and then your little 2 lot is going to get wiped out, right? And you're going to hit your stop loss, or you'll set up with slowdowns patented spring position, right? Where he's looking for a little bit of a break of that channel before he's taking it in the reverse direction, right? And so it can be really dangerous to kind of like anchor into a high volume node. That's why you kind of want to like have more confluence, have more setups. And again, this could be a setup for a Rubicon that he has specifically that he'll let me know. But he's doing stuff with his kiddos right now, so let's not bother him too much.
Yeah, I just want to say thanks for trading from the chart, because we can give you so much better feedback here. I can see you got in short here. You immediately reduce some risk as a small loss. You got in again here, and then you took a small winner, and then you held for another year.
I will say the best part about the trade is the thing that you hit on the last part. His thesis didn't change. He got stopped out. He had a tight stop, but his thesis is still the same. He had the conviction. He entered again. He didn't get shook out of his position. That's hard to do. That's fortitude. David, how many times have we seen that where people just like, oh, I got stopped out and run away? They never
go home. Swear, shut down the going.
Yeah. All right. Any more comments, or can we move on?
Get to Alan.
All right, Alan, and let's open the mic for Alan. Alan, it's been a little while.
It has been a while.
I
haven't heard
know.
from
Well,
Alan in a
we
while.
were covering him every week there for a while, but then it's yeah, been a bit here.
I'm
Welcome.
here.
Welcome back.
We spoke last week.
I wasn't here last week, so it doesn't count, Alan.
Oh no. Oh, okay.
And you don't message me anymore? I feel like we're not
Don't love
friends
me anymore.
Yeah.
BFF.
Yeah, I know. I know. But you still project like 2 hours a night sometimes.
Yeah. So
Sorry. Yeah. No. I didn't want to bother you, so I just kind of.
it's never a bother. Never a bother, guys. Never a bother
yeah,
to
you had,
have market discussions.
What impressed me the most about you is that you took the CFA 1 and 2 and on your own without grading it. Because I took it, so I know how hard it is, and you just marked it yourself. And I'm sure you did it honestly without looking at the thing. And that really stood out for me. I tell everyone about it.
Well,
I said,
sadly, it hasn't materialized in anything that's actually outside of market knowledge. So it works great for markets, but it's not great to talk about at the bars or in a
No. It's fun. It's more fundamental stuff. It's nothing.
Yeah.
So
I think there was a conspiracy when I got my list. Everybody was mean reversion trading, and I think that everybody knows that I'm a hawk against mean reversion trades. Alan is like a mean reversion trade connoisseur. He and I have had long discussions about these. So really, basically, my notes are going to be kind of along those lines. And this is just mainly to keep, some of the newer guys, because we do have newer guys here that are a little fresher. Keep you aware of the things that are important with mean reversion, and they are counter trend, right? And that's kind of what we're seeing here. We see a large sell-off, but he's looking at very specific things. One thing we don't have here, Alan, is you call out market pulse, but I don't know how much that impacted your trade here. You can toggle it on the subchart.
what do you mean toggle it?
So in your image right here, you can hit that little gear icon right next to bullish stop run.
Yeah.
And you can toggle on market pulse for whatever algo you're looking at, whichever one it is. I think you use VPI if I remember correctly.
Yeah, but Bruce said that when you do a screenshot, it doesn't come on, right, Bruce? No.
The market pulse widget won't necessarily show up, but the actual but when you toggle it on in the subchart, it'll show it in the subchart down there below. It'll show all the little lines and stuff. So I'll show you later in DMs. But
okay, I didn't know it shows. I didn't know that it shows in subchart. I thought it was only on the screen, which is that where I find that works best. Anyway.
Yeah. No, I'll show you exactly what I mean. But I think that'll help for this particular image, because one of the things that I noted here was I know you use market pulse. Obviously, we had conversations and stuff, but I wasn't sure exactly what you were looking for here, so I couldn't really critique like your entry for like your confluence and everything else. One thing I did note,
right where the pencil isn't that the purple entry?
Yeah, but I don't know what you were looking at. Like, what part of market pulse led into your specific entry? Like, was it just?
I use market pulse on practically every trade because that's a kind of like David made a joke like when he had his computer on and and all of a sudden he heard the fan running, so then he went to the screen because the market was moving. Remember that, David?
Yeah. There's times the wife's come down and market pulse has just been going off the entire time. She's like, "What are you listening to?" I'm like, "Oh,
yeah.
The market's moving up right now." She's like, "How do you?"
Yeah, I was on my
tell by the tone of the beeps.
I was on my parents' house for a holiday, and my mother comes in. She's like, "Why is the computer so quiet?" Because I didn't have it on for that minute.
One of the reasons why it's important though is kind of like, again, kind of more targeted to the newer traders. You want to be able to go back and you want to be able to review these things. What specifically was your trade entry criteria? Why were you looking long? Why were you looking for a counter trend like reversion style trade? Those things are really important here. You have a lot of like different order flow techniques and stuff that are kind of showing up, which is great. I do like that you called out your stop loss here. So I know basically exactly where your entry is, right? Like, I mean, it's a little bit like maybe a tick or two off from like where I could visually see it. But I know, okay, you're looking at 20 tick stop loss for NQ. This is really kind of like where I look for the most part because you want to give that NQ a little bit of room to wiggle.
I don't mean to interrupt you. Where Bruce just had his pencil with the red outline to the right.
Where?
To the right. To the right before the prices. One more to the right.
Yeah, I got in here after seeing the bullish volume bar. Yeah.
On the bottom. You see the red outline box?
Yeah.
Yeah, okay.
No, on top of that. One on top of that.
This one?
Got in there, yeah.
Okay.
That's where I should have put it. I have problems with with the spacing of the thing, so I kind of changed the font size and stuff. So I figure I put it there and pointed the arrow. So that's where I explained why I got in over there after seeing the volume bar and heard the market pulse as well.
Yeah.
And I like Bruce. I think you all know I like the short squeezes. And it wasn't really a mean reversion. It was kind of. I noticed that the short squeezes a lot of time are mean reversion trades because when they squeeze up, not every time obviously, but many times it goes right to one of these POCs or one of the VWAPs or something like that. So that's why I don't understand why you don't like VWAP, and I respect your opinion because you're doing more than me, but I'm kind of convinced that just from looking at it, that it just works. It makes sense to me. So, but
I like it great for a target, actually. Yeah, I really do like it great for a target. I like it for confluence. It's just not like a leading indicator. I feel it's a great trailing indicator, and that's the way you're using it right here, right? Is you're using a trailing. You're already in it. So trailing in this case means you're already into a position. Where are my targets? Where am I looking at? Where am I going in the future? And that's kind of what a trailing indication is I'm looking, okay, I want to go to VPOC or I want to go to VWAP. Also, if you know, like it looks like you front ran it a couple of ticks. I love those things. I do those things all the time.
That's a Bruce thing. Yeah, that's his advice. That's like ingrained in my head.
I follow that all on my own and love it. So
it's not worth it. It's not worth it because I've seen this so many times. It gets to away, and all of a sudden there's a stop run to the downside, and for what? I should lose all that profit just
exactly. If you want to stay in the trade, alter your trade strategy around to being able to scale out of a trade, even if it is again, using like micros. Maybe you scale out and just leave a micro running, even though it's only 5 points a tick or 5 points a point. Well, this is NQ, but you get the point, right? Like so.
Yeah,
I love VWAP from those perspectives. I don't like it necessarily for like entry criteria. Like we'll see a lot of people who
no, yeah, I agree with you on that.
Okay, yeah, then we're on the same page then.
Yeah, I wouldn't use it for entry. I would use it as the market is like it, also a lot of times when there's no like big liquidity lines and a market will have to search for something, so it'll be a POC, a VWAP, or anchor VWAP.
You can also see where VWAP is, right? So VWAP right now is also lining up with previous consolidation area, right? So like
I always label I label where the POC and VWAP is, like they're just so it follows along. Yeah, right. That the way Bruce is lining.
And you can see it kind of run right into that line. And Bruce was highlighting those earlier as well. Those are the same areas where I look for those kind of like breaks and retests kind of things and those kind of same entries. There's nothing wrong with those. I think that those are great.
But look how it just went a little bit above VWAP, and I think that's just because the momentum carries it up. So it'll maybe go past the whatever VWAP or POC or whatever it is, maybe just like a little bit, because of the velocity of that. But
it could be stops that continue it. Stop continuation happens a lot. You'll get a lot of slippage, especially in NQ. You'll get a lot of slippage at those areas around VWAP because traders trade VWAP like it's a thing. Like it actually it's a thing.
Some only trade VWAP. Some only VWAP.
So it doesn't really like. There's nothing wrong with it conceptually from that point. So you'll get a lot of volume around there, especially because it is a volume weighted average. So around those areas, you'll get a little bit wider of a spread sometimes, and you'll get that slippage, especially in options market. Like if you're doing Q options or NDX, you'll see that same slippage. So
I think
that's that kind of continuation. Yeah, I don't look for hard and fast lines to like, oh yeah, it's going to hit this point specifically and try to tick it because it's just not worth it, like you mentioned. Why give back those profits?
So like I was mentioning that. So that little green that went above, to me, that's probably just since most algos or traders are they're looking at VWAP and they probably took some profit, but then you see there's red bubbles. Like I stopped the trade here for the screenshot, but then it started once it reached it, then it started to reverse down. Like and that happens constantly. Not always, but constantly. Yeah. I'm sure all of you traders, all of you guys, even coach, everyone, once you're like up like say $1,000 on a trade. and it goes to 700, like you're not happy, even though you made it. It's like it bugs you.
It's
Like you
like
want
a
$300
bumblebee in
back.
a jar, mate. I tell you.
Maybe nobody admits it, but I think even
I
from the top
hedge a
to
lot
the
of
bottom,
positions for that reason because I don't want to give back profits.
and then
know?
and then one big mistake that I have to work on is that I want that $300 back, but I end up, it's not going. Then it's 500, and before you know it's 400, then you're like, oh, screw it already. Shit, it's just, then you lose everything. You know, that's the right.
Off the
David
big
is
talent.
laughing.
I don't have that issue, sadly. So, or
I'm
gladly.
sure I'm not. I always feel like I'm like the only one because I'm, you know, you're alone with the Discord and you're not around other traders. So I always feel like I'm the only one who are making these mistakes. And
No, we all make mistakes.
who
We all make
does-
bad trades at
You're not,
times.
buddy.
I entered short earlier today, and I took some heat for about 20 minutes before the market actually decided to move. But
Yeah, I have another question for Bruce on you coaches. If you see on the bottom left, where the bracket orders are, I don't like putting a take profit bracket order because, you know, what if it's, you know, the market has momentum and it's shooting up and it just stops you at like whatever less points than where the liquidity could be resting or whatever, for whatever reason. But I have the stop loss set at 20, like a standard. But I've been noticing, like, every time I enter the 20, it just hits it instantly. Like it goes 20 points in like 3 seconds, like a lot of times, and it just kills my trade. So I was wondering what, you know, all you guys' opinions are of
so
a stop
with
loss
interest-
size.
Well, with stop loss, I put my stop loss specifically based off of what I see in the order flow. So for like your entry, my stop loss would be below 18,650 probably. I'd probably pick the swing low if I was going long on this one.
Well, the reason I agree with you also, it should be by liquidity marker, but the reason I put that there, maybe Bruce, you can help me or one of you guys. But what was happening, so let's say I'm above the market, and then I want to put a stop loss on the bottom, and I place it, and it just closes the trade. So that's because I used to use Bookmap, you know, primarily for trading, and then I couldn't, like, every time I put the stop loss, like I just put the arrow next to the stop loss, like whatever, just put like, I don't know, wherever I made 18, 60, 60, whatever number, and then it just closes the trade. And I don't know what I'm doing wrong.
You'd have to show me exactly what you're doing, and then I could probably help you a little bit.
I just take the arrow, you know, like and place it next to whatever number I want the stop loss, and it just closes it out. It just closes out the trade. As it closes out the trade, it says it closes out the trade as a market order. It doesn't place it as a limit order. That's what the issue.
It should be a sell stop.
Yeah, it should be a sell stop limit order.
Yeah, not limit. You don't want limit.
No, it's always market.
Always market. Because if it was limit down here, Alan, you can really get hurt. It can come down through. Let's suppose the book sweeps through that area. You're still in it. You didn't get filled.
No.
So what's
hold on.
Okay.
In this case, it won't be able to do that unless, like, if it sweeps, you're in the sweep if your order is already entered and your order is server side, not client side, because you're in the order book. So as soon as you're hit, you will get there. The reason you'll have issues, though, is if there's no liquidity there at all, but in NQ, that's not generally going to be an issue. You're going to be fine in NQ because the liquidity in the market is incredibly tight. The bid-ask spread.
So I'm a little confused. I shouldn't put a limit order as a.
That's a side topic. That's just distracting the thing.
Actually, this is really important. Actually,
but it's not the question that he had. The question that you have is specific. There's an issue that you're probably running into. If you show me what you're doing exactly in screenshots, I can relay it to Bruce or relay it to some of the devs, and they can look.
I'm just taking the cursor to the right side and clicking left.
I understand what you're saying. That's all I do. Verbal words are not as good as screenshots that you can relay to an actual order ticket for service, right? That's why screenshots are much better for kind of like.
Or maybe we could talk separately, and I can show you.
That's totally fine too.
Yeah,
I'm gonna have to go in 7 minutes, by the way. Just to let you guys know.
Just to reiterate about if this was a stop limit down here,
Yeah.
and
Yeah.
it sweeps through here, you will not get filled. What will happen is this order, when price hits this order here,
Yeah.
it will unpack, and it will be a limit order. If price doesn't,
it's converted immediately into a market order.
no, it's not.
Yeah, limit becomes market.
When it's a stop limit order and there's a sweep from above on a sell stop, it will be immediately converted to a market order and transacted at market
It
price.
won't. It won't. It's a limit.
I can get you the CME thing if you want.
Okay, I've had other instances.
I can pull up the actual documentation for you. That's exactly how it's supposed to be. A stop limit order, when executed on a sweep, should be immediately converted to a market order and transacted at market price at that level. It is a resting order in the book that you can't see. That's why we can't see those kinds of stops. That's why they're synthetic stops a lot of times.
Okay, you'll need
I'll
to
pull up the
you'll need to
documentation for
show
you
me
later.
this, because
That's fine.
this is from I've seen this with other people. They've gotten hurt. They flipped the. I'll show you, and please just make sure that you know what you're doing here. Here in Bookmap, for example, it's over here, right? If you go through order, open your trade control panel. You got order duration, good till cancel. That's fine. And then this one says stop order duration here. Okay, make sure it's market, not limit. If it's limit here, now you can put an offset in here. That's a good thing. But like then what will happen is
here you go. I got it for you. I got the exact definition.
Okay, well, price will come down. It hits this. It unpacks in Bookmap, and it will be a limit order at that point. So you might not get filled. So a book sweep through that area can be really dangerous. You thought, oh, I thought I put my stop in. You did, but it wasn't a stop market.
So a stop limit order is activated when the trigger price of the order is traded in the market. The stop limit order is then executed at all price levels between the trigger price and the limit price. So as long as there's orders at that level, it will trigger and you will get a fill at those levels.
Yeah, but a book sweep won't. Anyway,
a book sweep still has to transact at that level because it's a sweep order. It's a different order than just the bid retreating. Now, if the bid retreats, that's not a sweep. That's the market widening. And in those cases, somebody could be on the aggressor below it, and then your order will not get triggered. That's generally not a case in NQ or ES. It can be, though, during parts of news events or where there's no liquidity in the market and market makers aren't obligated to provide liquidity there. But I've got the whole link for the CME.
And Bruce, one more thing. I put in your All Markets Bruce page a copy of my Bookmap journal entry along with that trade. If you want to show it, how it corresponds. I did them together because I wanted whenever this gets presented to show how it corresponds together. But if you want to move on to someone else, it's fine. I just wanted other people to see how the journal works.
Oh, okay, okay. Yeah, I see what you're saying.
It's in it's right below it.
So yeah, let me just, I'll try to quickly show it because that new journal, really, thank you, Alan. Thank you for trading from the chart. And like I said, I really appreciate it because look at this. And it is noteworthy just to comment here. I mean, you grabbed a nice piece out of this. You're really honing your strategy, Alan, even though like Jack said, this is a kind of mean reversion, but it's a momentum back to the mean, which is funny.
Yeah.
It's a funny kind of setup, but you're getting really good at it. And it's your thing.
This is something he's been working on a long time.
Yeah.
Oh, yeah.
Exactly.
Just get thousands of hours.
Kind of similar critiques. I want to see your trade criteria. I want to see you be able to empirically put it down because I think you got something, Alan, and I think you got it for the most part. But kind of us going back and forth. There's been periods where like it didn't work out well, and it kind of burned you a little bit. And like if we can kind of like annotate that empirically, then like we can just run downhill the whole way.
That's one of the points I have to work on.
Yeah, but I mean that's fine. It's just you and I have been back and forth talking about these things all the time. So it's working. You got things going. It's just time to like nail it down, hone it in, collect the money.
Yeah, all you guys. David helps with his advice and his jokes. Bruce, I call him Captain, Captain Bruce. He's the spirit of the ship, and
Bruce is great.
I like Stan. I like the French accent. In fact, he sounds smarter. Sounds smart. And then Jack, I don't know. Jack, I know you have like that engineering voice sound. I don't know, like
well,
it's not
my
a bad
degree is in engineering, so
yeah, you sound like an engineer. Yeah.
So kind of that was kind of the last thing I had for him. I want to go over the next one real quick before you guys, if you guys want to talk with Alan a little bit more. Before
I want to look at the journal. The journal.
I'll show it a little later. I don't see it, but let's let Jack's got to go. So let's go over D&T matter, and we'll keep you in here, Alan. Just mute yourself for now, and then
let me find it in case you can't. Yeah,
and let me open it up the mic here for D&T.
Okay, no problem.
So with D&T here, I was going through the spreadsheet. I've got the notes for some of the things that I was looking in the spreadsheet, and then completely didn't pull those up because he posted this trade literally minutes before, and I wanted to highlight a couple of things that really stand out in this one specifically. This is a great visual for everything, and you can see this in a couple of different ways here. At the top, we've got two big call outs that are completely different colors showing liquidity in the red. It's a great way. Okay, so when he's coming back to this image days, weeks, months from now, he knows what those giant red blocks are, right? And then similarly, he's looking at volume transacted specifically, and we can see that on the buy side with the green vertical blocks, and he's also got callouts. And then in the red vertical blocks, he's also got callouts there. This is the second image of his overall like review for the day, but this one really, really stood out to me, and I really wanted to call it out because I think that this is a great visual. Now, this might not sing to everybody, and you might not like it specifically, but there might be elements here that you like that you can utilize. And that's one of the best things to take about from trading. You don't need to create it all on your own. There's been somebody who's done something similar, and if you like what they've done, take it, use it for yourself, make it, iterate on it. You don't need to reinvent the wheel and fire the entire time. You can just kind of like work with it as a whole. So that's good for the second image there. That's kind of the bulk of the second image. If we can go to the first one real quick, we can actually see, like, scroll down, sorry. I posted them part 2, part 1, but looking at part 1 here, we can actually see kind of mean reversion looking for the day. That's what he was looking at for the day. Again, very obvious what he's doing. He's got an ultra wide screen, obviously, but right in the middle, we can see it. I think that this is incredibly important because now I'm looking at this chart right now, and anybody else who's reviewing his trade is looking at it from those kind of perspectives. He's also got where his extensions were on the drops, and he's seeing, okay, the extension from this point, from my stops and icebergs, is showing right here, and he's got volume there, and he's notating the volume. And then he's notating how price is interacting with these absorption levels at the low of day, and kind of working around that and developing kind of an observation and a trade plan from it. These are very important concepts. Not every day do you need to take a trade in the market. There's a lot of times where I don't necessarily take a trade with spot, and I'm looking at specifically like, what's the market doing? How are things going? You'll note that I travel a lot. I leave Bookmap up when I'm traveling so that I can come back and see what it looks like. So I can go back and see, oh, okay, yeah, we had a lot of like buyers in this area, and today I'm looking for, are buyers still there? Is there structure in the markets for these kinds of concepts? So this kind of observing is really, really important. So those are the two major things that I really wanted to call out here. I really like a lot of this setup D&T, and I really think that this is great here. I've got a jet, but I'm sure the other guys here will be able to support you on that. Really great work, though. And as you know, I've been a fan of the stuff you've been posting for a while. So I really do appreciate the time, buddy.
Thanks, Jack. Thanks so much. I know you got to go, but we'll and he's gone. But D&T, you got the mic. Step up.
Can you hear me?
Yes.
Yep.
Okay, awesome. Yeah, thank you. You know, these absorption levels I've been looking at have been a trip. They've been really difficult to navigate, uh, especially in choppy mean reversion markets. So, what I'm actually going to be, what I'm actually doing with these absorption levels. So on the bottom on the market pulse, we see um, the red market pulses there. Those are absorption levels, and when it crosses the threshold, is when I'm notating these levels of where it's these absorption levels. So um, on these mean reversions, it's nice to see to like kind of notate these mean reversion with the absorption levels. It's kind of interesting to look at. Plus the volume, and it's really neat. It's been really fun, but it's also been really difficult to use them because market just can go through them easily, especially in like choppy markets or mean reversion markets. So basically, what I was trying to say was I only really want to start using these with structured trades. It's really difficult to use them in mean reversion.
Okay.
Or anywhere else. So basically, if I wait for structured trades like VPOC migration trades or VWAP to VPOC or other structured trades like that, maybe even IB continuation trades or IB failure trades, those types of trades there, I I would like to use the absorption levels in conjunction with those, but using them alone, it's really difficult. I'm finding it really difficult to actually become to see profitability with it otherwise. It's
I,
also helpful to see reversals too, like this one.
yeah, I mean that it's a great realization. Like
Yeah,
you
really.
know, just you know this now, you learn this. So
Hmm.
now start to put the pieces together. You're looking for something very specific. You're looking only for this kind of absorption um, at higher time frame levels. There's your filter.
Yeah.
And that should help you. And it was kind of hard to learn that, but it sounds like you kind of turned the corner there.
Yeah.
Um,
Yep.
I first off, I just want to comment, like, these are really beautiful images. So good job there. I think it helps clarify, and you know exactly what you're looking for. Look how clear that is with the volume and the volume here. This is what Slowdown had talked about in the past. This is, and Jack had commented here too. High liquidity on the horizontal, high liquidity on the horizontal, on the vertical, the volume. And you're putting these pieces together, and it's very clean and clear. And I'm sure this is just going to help you understand exactly what you're looking for.
Yeah, I was looking at a couple of Slowdown's pictures, and I'm like, man, it's so much more clear on his. I need to fix mine, so I actually just did that a couple days ago. So thank you,
Good
Slowdown.
man.
It took a while to kind of tweak it, but it's actually, now that I'm looking at it, it is a lot more clear, and it's helpful also with the stop pressure on market pulse to see if that buy volume on the vertical is like new buying or if that's just stops
Mm,
buying.
mm.
So if you go to the other picture, this one, yeah, that right there, that green box,
Uh-huh.
and on the market pulse, you don't see the market pulse pinging or the stop pressure, which is the yellow. You don't see the stop pressure in on the market pulse pop pinging up or anything like that. So this level here, this green buying, which is actually really large buying, I perceive to, I don't know if like it's true or what, but that's something I'm just like starting to look at since we just got it. I perceive as new buyers. And so if you go to the next image, I actually highlight, that area of new buyers, which was from that last picture. Basically, if you move left a little bit, that new buying area, and then we hit it on the top, and market just goes right through those new buyers and just stops all of them out.
Yeah, you mean I'm sorry, I didn't quite follow. You mean down here, over here, or on the way up in
Yes.
here? You mean these new buyers up in here getting stopped out down here?
Well, no, I actually meant the buyers from earlier
Okay.
getting stopped out. Yeah, those buyers there
Ah,
on the left side.
okay, in here, getting stopped out up
Yeah,
in here. Got you. Okay.
right.
Yeah. Yeah. Great.
And then there was another one from yesterday that was very similar to this as well. But the area of new buyers, once the market actually got up to that area and it entered into that new area of new buyers and the skew was like downwards, it basically just stopped them all out and just swept right through all of them and then just went down on stops.
Yeah. Yeah. On huge.
So like all basically without like when we have that stop and iceberg detector, but like trying to actually categorize it, like looking at the numbers itself is really difficult to kind of gather that information. So having the algorithm actually detect it for you over a period of an hour, it's pretty nice to see like what the volume, if that volume that you're seeing is actually stopped or if it's new buying. So it's nice to actually see like sometimes if it's new buying or if it's just stops that are buying or selling.
Yeah, totally. I look at the same thing all the time. David, Stan, any comments, feedback?
I'd echo really, Bruce, what you've just said. If I cut across Stan, sorry, Stan. Nice chart, nice wide screen. That is for sure. And I'm really, you've ticked my curiosity here in terms of sort of unpacking this idea of new buyers and the lens across absorption, lower the day, etc., and so forth. And I know a lot of the time tonight I've just been saying about a more sort of like macro view of the world here, Bruce, but it's another lesson for us all here that there's many ways to look at the same, the same game, at the same market, like I've said before about sitting in the stadium and so forth, and just trying to find your own edge using the various tools that Bookmap and other platforms have got to be able to decide to minimize risk to be able to get in.
Yeah, totally. It is really funny. I mean, different traders looking at the same levels, but totally different analysis. So, Stan, any feedback here?
Well, I really like the fact that he's highlighting the relative volume, the short-term liquidity. So in this case, you took a long, or it's just about observation?
This was observation. I actually traded pretty badly today, so I minimizing. So like I'm adding all these inputs, right? Like absorption levels, area of the SI, the stops and pressure, market pulse indicator that we just got. So all these new inputs, they're adding conflict, and I see that, I recognize it. So I'm mostly just observing it, and I really want to minimize my trading. So if I'm finding how it works and starting to understand how it works, I might be able to just take some of these pieces and add them to like another an actual structured trade. So like filtering it. So yeah, adding all the inputs doesn't really help, but it's nice to actually like see how they work. And yeah, but I didn't take this trade, but and looking back at it in hindsight, I actually can see it though. Like it's pretty nice.
Well, that's perfect. Yeah, but nice first step, making observation. But potentially, you can try to already try to make a checklist about what you are looking there and what you might want to take. And if you want to minimize, just you set a maximum of criteria you are looking for, and try to take the trading stats from Bookmap and make different statistic. Might be maybe helpful. Just try to take it. I think as Bruce mentioned, it will just give you experience. It will just make you more confident, and you will know what you are looking for. Yeah, you will make a habit and know when to cut when you will have more confidence in the trade. All right.
Yeah. Okay. Yeah, I appreciate it.
Yeah, good stuff. This comment is for you, Alan, and a few others. Like we keep pushing this. I know you guys do this work, but I sometimes it would be good just to maybe put it in on the side or something, like put in a checklist. I'm looking for this, and this. Now I know in here you're marking up things and identifying things, and it's not necessarily a setup. It's that would be the next step, though, is starting to focus on more criteria, like you said. For you're looking at more kind of a structured trade, but have a criteria, and that will minimize the confusion, because you know exactly what you're looking for, and it's a stepped out process, and that should help. So try it, and we find. I mean, I think everyone who's done it has found it helpful.
Oh, definitely. It's actually I actually added it to the my VPOC migration, like 1, 2, 3 pattern, different different than sharks, but yeah, 1, 2, 3 pattern pullback on a VPOC migration. I want to see that 1, 2, 3, some type of pullback on a VPOC migration to one of these absorption levels. And oh man, it's been beautiful.
Perfect.
So I'd like to implement some of this other stuff. So yeah, I appreciate it. Thank you.
Yeah, perfect.
Nice
Okay.
charting.
I'm sorry, David. Anything else?
No, just saying nice charting. Really good to see. Thank you. Well done.
So, guys, we're at over 2 hours here, and I promised I would cover some of you other guys in here. So I'm happy to stay if you guys like, or we can meet next time. Let me bring up mine here, and you guys will be top of the list next time. So Rob Davis, Crash, you got some interesting stuff in here, a lot of colors, and then Valet Fan. So that's who I have as my three, and I don't know if you guys like. It's up to you. Like, you're here right now, all three of you. So we can go over it, or do you want to? Are you okay to kind of defer?
Let's go. He's saying.
Yeah, they're there.
Next week is good. Okay. Yeah, I'm really curious, Crash, though, and just to walk us through some of these things in here. But really like what you said last week about confluences, more and more confluences. Yeah, maybe I'll hold off. Here's why. Is Rob and Crash, you guys, like, I know you're making this content, but you're not filling out your spreadsheets. So just take the post that you have and just copy that post, and then just paste it into your spreadsheet. Try to have a tab open in your browser so that you can do that. And Rob, I wanted to go over yours just because you were going through replay mode, and it might be insightful to go over. Well, maybe we'll wait because we're going to have Rob tomorrow go through the replay mode and how he uses it. Yeah, that'd be fantastic. You I think we're all going to learn a lot from Rob. It was really interesting what he covered, and I really liked his process. So let's see. Okay, so you've been working on your house to sell this house. Okay, no problem. No problem, Crash. I know you create content up the wazoo, so don't worry about it. But I just noticed. I know you post. It's just like take it and throw it into the spreadsheet. And then Rob Davis. Yeah, maybe next week would be better. And then Valley Fan. I didn't have a really good one for you. Just I know you're into getting into the futures here. So you saw some nice liquidity in here, and you're also looking at your floor trader pivots and stuff. Yeah, if you guys don't mind, let's you guys will be first up next time, and top of the hour when we do it next time. Can I make that deal with you?
Do the devil.
Okay. Hey, this was a long one. We had all the coaches, which was great. So I just, again, I'm really so appreciative. Thank you, coaches, and thank you guys for the good content. Really good content. It's heartwarming to see the improvements along the way. Like DNT, oh my God, look at the images there, and then just getting better and better. Alan, you're totally honing your strategy, and I mean all of you guys. Shark also, and now you're using that replay mode for the trading and retrading, etc. is really great. All right, guys. So thank you all. Thanks for coming. We'll wrap it up, and we'll see you guys next week. We'll see you tomorrow for the Rob. He's going to take my place at 10 a.m. So I'll be there to host it with him. All right. We'll see you then. Thank you, guys.
Cheers, guys. Take care. Stay safe. Thanks. Bye.